Hi, everyone. Welcome to Mish's Market Minute. I am your host, Mish Schneider, and this is on behalf of StockCharts TV. This is our special segment that we're bringing you today. It's incredibly exciting because hopefully by the time it's over, you're going to have great information on how to tackle this extremely confusing market starting next week. The name of this segment is July Calendar Range, so let's get going. Okay, so with the July calendar range, everybody knows about the January calendar range because it's obviously the start of a new year and people start with all different types of anticipation and expectations. But what's so interesting is that we get a second shot with this in July. And this is a time when you have the big money management systems that would reevaluate for the second half of the year. Now, each one, whether it's January, July, has several calendar ranges. You have a one-day calendar range, which is unique to January and July only. Then you have a one-month calendar range, which of course is not unique to any 1 month. Every month has a 1 month calendar range that's set. And then you have the 6-month calendar range, and that's exactly what we're going to talk about, because really basically what it is an expansion of the opening range. So what happens is that once you have the reset of the 1 day, if it's at January, July, the 1 month, and then the 6 month, you really can see how things will trend. Either you'll see continuations of trends. So if, for example, if we break down under a 6 month, 1 month, 1 day calendar range for July, and we're in a bear trend, that possibly could mean that we'll see more downside, or it could be actually some kind of a way for us to see the trend change. Now, the other thing I want to tell you is, first of all, before we do that, and I tell you more, is here's a chart. This is from the S&P 500 in 2021. So I really wanted to show you the different days, just like I talked about it before. So if we go here to 2021 in the very beginning, you have, because it's the beginning of the year, the 1 day range. The 1 day range also happens to set the 1 month range. And then here, after 10 trading days, you sit with the 6 month calendar range. Now, what's so interesting is that it's not always clean, right? It broke out and then it came back through and then it broke out again and off it went. But when it broke out this time, it came down, and you have to have a series of other types of indicators, which we're going to show you, to make sure that even if you get chopped up a little bit, you're not just looking at this. But what's more important is that as January went on, as we got into February and we established a new 1 month calendar range, once we took out that 6 month calendar range, you got a nice move. And then it failed it again, never taking out the 6 month calendar range low. So in this type of situation, what you could say is if you get in right at the break of the 6 month calendar range high, and you want to be more of a swing trader and it doesn't break down under the 6 month calendar range low, you could choose, if you're more of a swing trader, to have that as a stop. And had you done that in 2021, obviously you see that you would have done very well. If we look at July, the range was even tighter. So we never took out the 6 month calendar range in July, but we did take it out from the low after it was established. But what we call this is a reversal trade. So when it breaks it down like that so quickly and comes back in, you may have another opportunity to either say it's not going down anymore or an opportunity to buy. And then, of course, you can see here it actually broke out of the 6 month calendar range, tested it once, failed it again, and then went back up. Sometimes it's very clean and sometimes it's very choppy. But regardless, if you use it with other indicators, it's very helpful. Here is another situation where we're looking at 2018, and I wanted to show you something that in the beginning of 2018, how choppy it was. You came into 2018 and you immediately rallied. The first several days of the month were incredible, took it out, and then it immediately failed. So if you get into a situation like this, you can see where you can follow the breakout and put your stop where it actually starts breaking down. And then the same thing if you were inclined to go short, is sell it, but then get out when it starts clearing back over that 6-month calendar range. And then look how well it stayed within that till it broke. And then it kind of chopped in it until we got the reset in July. So let's look at the reset here. Here's our new low. Here is our new high. We had a great move up, broke down back under the July calendar range. Again, chopped around, but then once we very decisively closed below it, with, again, other indicators, and we're just looking at the SPY here. You'd have to look at a whole bunch of things, including the economic family. That's really where you got your best follow through to the downside. I wanted to give you a little bit of history here before we go into the present. So your first day range is your July opening range. So that means that whatever the high and the low is for that day is your opening range in July. So we've already had that, and we're going to take a look at that. Then your 10-day range is actually your 6-month calendar range. So you want to use breakout rules and reversal rules, kind of like I just showed you very quickly. And of course, market confirmation as part of it. Obviously, in a macro where everything is going down, if it has a counter trend, and we're in a trading range as we are so far in 2022, you have to ask yourself, is this a really strong breakout? Or is this more of a mean reversion trade? So there's always other indicators, including the 50 and the 200-day moving averages, our triple play, which you have as part of your ACP plugin, which of course is how it's performing against the benchmark. And then, of course, our real motion indicator, which you have as one of your ACP plugins, which shows how it is in momentum versus price. Is it matching or is it in diversion? So you really want to have some level of confirmation, but the 6-month calendar range sometimes works amazing. And sometimes, like I said, you have to really regard these other things. So what happens on the breakout pattern that's bullish is you get a close outside the 1-month and the 6-month calendar range. And then what you would look for is the continuation. So you want to get in when it trades beyond the range of the breakout day. And we like to use a 30-minute opening range, which I have explained to you. And there is a video that exists on StockCharts that's evergreen about how to use the 30-minute opening range. Then for your stops, like I showed you, you can go under the low of the July 1 month or the July 6 month, and then have your close and continue, or if you close, you can do it under the low, but also if you get in and it closes and continues under the July OR high, you can say that's a fake out breakout, which also happens. And of course, this all takes practice, and we're going to be helping you along the way. So the reversal pattern that I showed you very briefly in the beginning is, let's say it trades under the July opening range, but doesn't close under. And then it closes over the high of that bar that broke down under the OR and under the OR low. And then it continues over the reversal day's high. So basically, it's a fake out. So then what you would do is you would get in on an intraday 30-minute OR breakout after the reversal to wait for the confirmation. And then again, you can have your stop under the low of the month. And stops right now are probably the most important thing when we're talking about the 2022 market. So I just want to show you a couple of other examples. So like, for example, this is TLTs in 2021. So you can see how nicely this broke down under the 6-month calendar range in July. And then you can see how it chopped up a little bit throughout the July calendar range. But of course, it really didn't go very far. You had one decent trade, maybe a short-term trade. But had you bought it on this day when it confirmed, when it broke out, it never did this day. So you wouldn't have got in here. See how it gapped up, but the next day you didn't get that confirmation. Here you did get the confirmation, but as soon as it broke back down, you would have been out possibly for a scratch if that's the way you're trading more longer term. Here in KRE, same thing. You had a nice clean July breakout and you had a pretty decent move from basically 66 up to 75. And then once you have a high and you have a gap down this is where it's good to have other type of tactics for trading. But nonetheless, it went right back down to the 6-month calendar range and popped again. Whereas look how clean it was in the 2021 part. It broke out, gave you a nice trade, and then just sort of chopped around. But that's kind of the market we've been in. Same thing here with Bitcoin. Broke out in 2021, then came right back into it. Never took out the 6-month calendar range low, reset in July, broke it briefly, broke out, then broke out. We wouldn't even count this one anymore. Now you can see it had a nice move and then a nice continuation. So it's a good, like I said, trend follower or continuation of a trend. And the same thing with XLF here. Couple of fake outs, but once we got that July range and we had that fake out here where it didn't get the confirmation where it was breaking down. Remember, we need 2 days. It broke it one day and the next day it turned right back around. You could have entered the next day just on that basic reversal and then even added on this day once it confirmed and made some money. So, you know, it's really, like I said, the macro is everything. Here's just a couple of more examples with DBA where it kind of chopped around. It was so clean in the beginning of 2021. You had this massive move, and then it kind of got a little bit more choppy as you got into 2020, July to 6-month calendar range into 2022. Gold also very, very been difficult to trade. You can see here is your 6-month calendar range, but here is your 6-month calendar range from July, where it really had this one little fake out below and it hasn't been very good. So the moral of the story is you want to try to find things that might be trending based on the macro and these other indicators, like the dollar, which has been straight trending up, while oil was very choppy in 2021 and has, of course, had the huge move up in 2022. So what I want to do now is I want to go to the charts and just show you we don't have the full setup yet, because what we have right now is a situation where we have a few more days to go before we actually have a 6-month calendar range. So I wanted to show you it from the SPY, where we're at right now. So if we go back to SPY from January, remember we said we had a 1 day and then we had a 10 days. So by the time we got to 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, here was your low and here was your high. And look how clean that breakdown was in the in the January 2022 breakdown. It really kind of set the trend for the whole year as being down. Now, here we are in July. And if we take a look at the beginning of July here, here's your 1-month calendar range right here. We basically did not make a new low in July, except for that, well, let's see, it was close. So we made the low that day of 372.56. So far, we have not taken out the first 10 days. That will end on Friday the 15th, but the high's been 385.666. So let's assume that our range is exactly that, 372 to about 386. That will tell you pretty much what you can expect, whether or not it breaks down under that 372 or breaks out under that 386. But mind you, we talked about other indicators. So you want to see the momentum improving. You want to see it clear the 50-day moving average. Always good to put as much together as you can, especially the things that I talk about and we're used to, and we talk about over and over and over again. Now with NASDAQ, here is, let's go back a little bit to the beginning, January, and you had the same kind of thing. When you started the year, you had your 1 month. Here you made your 6-month high. You made your 6-month low, and we broke it. And we've had some things along the way, but at the same time, we also broke down under the 50. And even if you were kind of late, you broke down under the 200. So now if we go here after having this massive breakdown and we look at July, here is the first day of July. So we've already had our range low of 277. Here is so far the high at 296.75. look how nicely that corresponds with the 50-day moving average. So now we will wait to see whether or not we take out the low or we take out the high. And of course, if we take out the high and it corresponds with the 50-day moving average, maybe that's the summer rally that we're going to get. On the flip side, of course, if we break down, then perhaps we're in for some more pain. And that's when you start to look at some of the longer term indicators. Now, right now, the NASDAQ is outperforming the SPY, but the momentum, as you can see, was doing better, but now it's breaking down back under the 50-day moving average. So if you think the market's confusing, it kind of is. So now here's XRT. I wanted to show you retail because retail is such an important sector as we go into the rest of the year. So 2022, same thing. We had a 1 day, but if you looked at the 10-day, by the time it broke down, you had a tremendous amount of follow through. So everything about the 6-month calendar range in January of 2022 was awesome. It told you this market was going lower. So the question is, what's going to tell you now? So here is your July 1st calendar range. Whoops, I'm having trouble right there. July 1st. So your low was 57.38. And here was your high, not quite 10 days in at 62.13. Now, once again, it's underperforming the SPY and it's also having a negative momentum on the real motion. So if it actually took this high out, you would have to really make a decision about how much you think it has to get through that 50-day moving average. And if it breaks down, really, basically, I can tell you that retail breaking down also already has broken down under the 200-week moving average. So most likely that means more downside there. Now, with UUP, I wanted to show you the dollar. Because really, with the dollar right now, which has been crazy strong, we just focus on the July here. So right now, here's your low. So your July low as of, the next day, as of July 1st was 28.04. This is UUP. And so far, the calendar range high has been 28.92. So this kind of makes it simple. First of all, we might be having some kind of a mean reversion to the downside, which means you might be able to get a cheap short out of the dollar, which is something we're actually looking at. It's well outperforming. And of course, you also want to see it break down under the Bollinger Band. And I've done a lot of work with you on the mean reversion trades as well. But from a July standpoint, 6-month calendar range, really until it breaks down under that July 1st low, we won't really break down under that 6-month calendar range low, but we can certainly do it on a reversal. In other words, it breaks down and never quite clear the 6-month calendar range high. And if it breaks out and confirms, that's where you get yourself stopped out. It's going to be very interesting to see what happens. Now, TLT, I wanted to show you this as well. Now, remember, I showed you how clean it was in 2021. In 2022, it was just as clean. By the time it made its 10-month, whammo. So, you could really see the smash in the bond market. But here is July 1st with a low of 115.22, but certainly not the low. As we know, the low now has been at 112.05, and the high so far has been made here at 117.75. This is well outperforming and has good momentum. So a lot is going to be impacted by what happens with the rates in the long bonds, of course. And also you have to understand that you're sitting on the 50-day moving average. So if you break down under the 50-day moving average next week and it breaks down under the low of 112, that would probably mean to me that the Fed is going to be more aggressive. And the flip side is if it breaks out over 117.50 and holds the 50-day moving average and continues to show momentum, that it's going to be actually more positive for the yield, which probably means we'll see how it works out with the SPY and the Q. So that kind of really sums up the 6-month calendar range and its importance. And particularly this year, anything that's going to give us insight will be helpful. So what I'd like to end with is this. Rather than leave you to your own to try to work this out, what we would like to do is offer you, as part of my daily newsletter, the July Rips and Reversals report. The report will give you at least 10 stocks or ETF setups to potentially begin the big moves at the July range inflection points. And then, of course, my daily will stay on top of it, as especially once we get through this July 6-month calendar range, I'll be writing about which instruments look like they're going to be taking out the 6-month calendar range to the upside side and the reverse, with the other evidence of the indicators I just showed you, the confirmation, the 50-day moving average, the real motion, the triple play, etc. So if you want to get this report for free, write this down. You can't click on it. It's www.marketgauge.com/July 2022. And you will be sure to get this report, which will be available over the weekend or certainly by early next week. So again, www.marketgauge.com/July 2022. And of course, if you have any questions for me, you can tweet me at Market Minute. I hope that was informative to you, and I hope this becomes a very exciting and clearer time for us as we head into the second half of 2022. Thanks so much for watching, and bye for now.
Hey guys, Dave Keller here with StockCharts.com. Thanks so much for watching our video. If you enjoyed it, and we hope you did, hit the like button right below. Also, we have so much new content every day. Consider subscribing to the channel. Just hit the subscribe button in the video or right below. Thanks for watching. Stay safe. Have a fantastic day.